also have on the line Neil Atkinson. He's the head of analysis Informa, who is also attending the OPEC meeting at Vienna. Thank you so much, Neil, for taking the time out to join us. Well, let me just start by asking you, starting with Nigeria's oil minister emerging as a new president of OPEC. Can she use that platform to influence proceedings today in any way?
Well, I would hope that she would, because OPEC is in a situation at the moment where the oil market is moving against it. And OPEC needs leadership and it needs direction. And it has a Secretary General, of course, but the OPEC president historically has been a powerful figure. And there is an opportunity for the minister to show leadership and help to broker agreement amongst the members. And I hope that she will take that opportunity.
Okay, give us a sense of what is being said over there in terms of what could emerge as the best option for OPEC.
Well, it's hard to say what is the best option because observers and markets are looking for a production cut from OPEC that is meaningful and credible. But I think that expectation runs against the desire of some of the OPEC producers, mainly Saudi Arabia and some of the other Arab countries, to wait a little longer to see how the market settles down and to see what impact lower oil prices has on the growth prospects for the non-OPEC producers and to see what impact lower prices has on demand growth, because if non-OPEC production growth slows down and if oil demand growth speeds up, that will start to correct the market by itself. The problem is that may be not fast enough for the needs of some of the other OPEC countries, perhaps including Nigeria.
Now, Neil, if OPEC doesn't cut production at today's meeting and decides to adopt a wait-and-see attitude, like you said, watching the markets for as long as 3 months, surely that would also mean that the cartel would lose some market share to independent oil producers.
Well, I mean, OPEC won't lose market share if it continues with its current production levels. OPEC would lose market share if it were to cut its production in the attempt to prop up prices. And in the past, in its history, OPEC has cut production to prop up prices, and this has led to the loss of market share. And many, many leading OPEC producers do not wish to repeat that experience.
Okay, how do you see the market reacting to that? I mean, if OPEC decides to adopt a wait-and-see attitude, well, just this morning we heard comments from Saudi Arabia's oil minister saying that Saudi Arabia and other Gulf producers are not considering an output cut. And we saw what that did to oil prices this morning, taking it lower to a 4-year low, below $76 per barrel. Don't you think that the market could react negatively to that?
Oh, I don't doubt that if there isn't a production cut, when the markets open again and when the U.S. returns to business, oil prices will go lower. There's no doubt about that. But I don't think they would necessarily collapse in the way that some people think. And it's a question of whether the OPEC countries want to hold their nerve, because if they do make a production cut and they deliver it and the oil price increases, all that does is provide an incentive for the high-cost non-OPEC producers to continue to increase their production.
Now, we know that some countries within the cartel, such as Venezuela and Nigeria, are at a bigger disadvantage compared to countries like Saudi Arabia, who is a top producer. Now, we know that OPEC is no stranger to internal conflict, divisions. What do you think the smaller oil producers, such as Nigeria and Venezuela, would be saying to Saudi Arabia in terms of reaching a consensus or reaching a win-win situation?
Well, I think Nigeria and Venezuela are not necessarily in the same situation. Venezuela is in a desperate situation. Its economy is almost totally dependent on oil. In Nigeria, of course, oil is very important. Of course it is. But Nigeria has a much more diverse and a much more dynamic economy, as we've seen in recent years, in many other sectors other than energy. So Nigeria, although, yes, as you say, it has a big population and it has high needs, will find it difficult to adjust to low prices. It might well be that for Nigeria, it could be in their longer-term interests to take some pain now in return for perhaps a better situation in the future than might be the case if they just cut the production now and see the United States and other non-OPEC producers take their market share.
Now, Neil, there's been a lot of talk about where oil prices could settle with or without OPEC's intervention. We've heard $50 per barrel, we've heard 60. I heard one analyst this morning saying he doesn't see oil prices going back to even $90 per barrel. What is your take on that?
Well, it's speculation as to how low the price could go if nothing happens today. You could make a case for much lower prices. I personally don't think they would go down by a catastrophic amount. However, what I think I'm fairly sure of is if OPEC does make a production cut today and it's regarded as being credible, the upside for prices is not as high as some people think.
All right. Thank you so much, Neil, for giving us your perspective.